Okay, guys, so today we are going to cover electronic bank statement reconciliation, you can say. Short form, it is called EBS, electronic bank statement. Now, here, if you talk about reconciliation, this topic is called bank reconciliation. Okay. If you talk about bank reconciliation, then we are having two kind of bank reconciliation. One is manual reconciliation, and second one is electronic bank reconciliation. So, what is the difference between manual bank reconciliation and electronic bank reconciliation? In manual bank reconciliation, uh, there are lots of things which is being done manually. It means you can say reconciliation is being done manually with the help of SAP itself. But in EBS, reconciliation is not being done manually. System will do reconciliation automatically. Now, if you talk about reconciliation, what is this reconciliation? Reconciliation is nothing but matching two or more than two data. Reconciliation could be anything. It's not like that only we are going to reconcile the bank statements and bank accounts or bank GLs like that. We can have customer reconciliation, we can have vendor reconciliation, we can have n number of reconciliation where you can match two data and we are trying to find out some mismatching what to say figures out of both. So that could be a reconciliation. It means we are matching, we are reconciling both data and try to find out the unique figure which is there, which is existing in only one side. It's not available in second side. Likewise, if you talk about bank reconciliation, what is happening earlier in early days, people used to have passbook and they'll be having like a bank account somewhere. So the passbook will be there and they're having bank GL also. So they will match the passbook with bank GL and try to find out the differences, because what will happen here, let's suppose if they're having here, if they're having bank account, bank GL, and here they're having bank account. So bank GL says total balance is 1000. Okay, and here bank account says total balance is 950. So there will be a difference, isn't it? So here what will happen, and people will find out during audit, people will find out that why this differences has taken place. So that is why every month end or every month or every week or every after 15 days, it depends upon the kind of transactions or the number of transactions organizations are happening. So they'll go for this reconciliation and they'll reconcile these two accounts, GL with bank account, and they'll try to find out the differences, why these differences are there. This is here bank GL shows 1000 rupees should be there in the bank account. But once you check the statement, it is showing 950 rupees itself. There may be n number of reason. There could be a reason like you might have released certain payment to the vendor by check, and the vendor has not deposited this check, for that check is not cleared yet. So what is happening, you have already debited or credited your bank GL, and but that amount could not deducted from bank account, or else sometime what is happening, bank has charged certain amount as a bank charges or something, they have deducted certain amount, but these amount we don't know that bank has deducted. That you could come to know only if you're having the bank statement, isn't it? So once the passbook get updated, then only people will come to know. Nowadays this passbook system is not there, but still we are having like since we are in digital era, people can log into the bank accounts and all, and they can download the statement and they'll come to know what is the differences and why this differences has taken place. So this is all about reconciliation, to find out the differences between bank GL and bank account. Now we'll talk about EBS, electronic bank statement reconciliation, on based on which concept. how this EBS is working, how it is going to work. So now what is happening in EBS? Generally, till now we used to have only one bank account, that is HDFC, let's suppose, account. This is your bank GL. But in real time, what is happening? We are going to, for one bank account, we are going to create 3 GL. This is HDFC main bank GL. This is HDFC outgoing GL. And this is HDFC incoming GL. 3 bank GL we are going to 3 bank GL we are going to create 1000, 1001, 1002, let's suppose. Okay, so these 3 bank GL we are going to create. HDFC main bank GL, outgoing and incoming. Now what is happening generally? So now whenever you have to make payment to any vendor account, what will happen? We are going to make payment by using this. This is called clearing GL, guys. This is called clearing GL. Clearing GL means clearing is nothing but you can say temporary GL or else like interim GL, anything you can say. So here the balance will stay temporarily. Temporarily the balance will stay. What is happening? Let's suppose we are having in this bank GL, in this HDFC bank main bank, let's suppose we are having 10,000. Okay, we are having 10,000 rupees and it is matching here in main GL. I'm talking about in GL account, main bank GL, you are having 10,000 and in bank account also 10,000. So here both the transactions are tally. It's tallying here. There is no difference as of now. Now what will happen once we start doing transaction? Okay, so here we have created 3 bank GL, HDFC main bank GL, HDFC outgoing, HDFC incoming. Now if you made payment to a vendor, let's suppose 1000 rupees to this vendor, 1000 rupees. So what will happen if you make payment, if you have made payment to the vendor 1000 rupees? So the transaction, the accounting entry will take place. That is, vendor account will be debited and your bank account will be credited. Here, let's suppose vendor debit 1000 and bank credit. So which bank credit we are going to do? We are going to credit outgoing. We will not touch main bank account. Outgoing is going to be credited. See here. So now this 1000 rupees, where it is? It is here in outgoing GL. Okay. Still the main bank is matching with the GL account. Main bank GL account is having 10,000 balance and your bank account is also having 10,000 balance. Now what will happen? We have given a check to the vendor and so vendor will be debited immediately, but we are not going to credit main bank GL. We are going to credit a temporary GL. Temporary GL means outgoing GL, HDFC bank account, outgoing GL we have credited here. So here the balance, this 1000 rupees is there in outgoing GL itself. Now what will happen? We keep on updating, we keep on, let's suppose, downloading this bank statement or taking bank statement, or we keep on receiving bank statement from bankers daily basis. So you got, let's suppose, this amount got cleared. It means like next day this amount was this amount got cleared and amount was transferred from your bank account to vendor bank account. So next day what will happen? Next day this bank account, your bank GL will have, sorry, bank account will have 9,000 rupees only in your this one. So next day what will happen? Whenever the bank is sending you the statement, whenever the bank will send you the statement, in that certain transaction will be there. So what we have to do, we have to upload those statement in SAP, and once you upload the statement, system is automatically going to identify that some transaction has happened, one payment has been made to the vendor, and 1000 rupees got deducted. Okay, so what system is going to do here? System will post another accounting entry. Here vendor debit, outstanding is credit, and here outgoing GL is going to be credited, and here main HDFC main bank GL is going to be credited. This one is going to be debited, and main bank GL is going to be credited with 1000, and here also with 1000. So see here, main bank credit means 10,000 minus 1000, so total balance here also it will be showing 9,000. So this is how automatically system is going to update the balance. We are not going to find out like what is the difference, why this differences has taken place, because always whatever the differences are there, those differences are getting posted, and those balances will be either in outgoing GL or incoming GL. Okay, in the similar way, let's suppose if you receive payment from a customer 5,000 rupees. Okay, so what will happen here? Our incoming, this incoming GL will be, we are going to make incoming GL debit 5,000. Let's suppose 5,000. Okay, since we have received 5,000 rupees we have received from customer, but 5,000 what? 5,000 check you have received. Okay, now so this what to say, clearing GL got debited, and customer is going to be credited with the same amount. Customer will be credited with the same amount. Here also the balance is not updated in main bank GL automatically. Here we have the transaction, whatever accounting entry we have posted, in that incoming GL is coming into picture, and the balance is posted, amount is posted to the incoming GL itself. Let's suppose we deposited check after 2 days or 3 days or next day itself, and it got cleared after 2 days. So when on second day, once you receive the statement and once you upload in SAP, on daily basis we keep on uploading a statement in SAP. So on second day, once you upload the statement, this amount got cleared. So what will happen? The statement is happening. The statement will have all the details, and then once you upload that statement in SAP, what will happen? System is going to automatically, system will come to know that some amount has been paid, some outgoing, so some incoming transaction is there. So system automatically will do one thing here. Now here main bank will be debited with 5,000, and your incoming bank will be credited. Incoming bank will be credited with 5,000. Now see, if you see here the clearing GL, here outgoing credit and outgoing debit. If you see here outgoing is credited 1,000 and outgoing is debited, so balance becomes 0. Here incoming is debited and incoming, and sorry, HDFC main bank, here incoming should be credited, not debited. So here debit and credit, this is also going to be zero itself, and finally the balance is transferring to main bank. What is this? 5,000 debit. So 5,000 debit means total balance 14,000, and bank already will have this 14,000 balance. Okay, so this is how this bank reconciliation is happening in SAP. We need to create, for each bank account we need to set up three bank GL. One is one is main bank GL, which is not being posted directly generally in most of the cases, and then we are having two clearing GL for outgoing payment and incoming payment. So whenever initial transactions are taking place, those transactions are being posted to the outgoing GL itself or incoming GL whenever customer payment, vendor payments are there. Because we know that these payments are not going to be cleared immediately. It will take some time, maybe 1 day, 2 day, whatever it is. So till that time, this balances will be there in this temporary GL, and once the balance got deducted or added in your bank account, it means that is going to be updated on your bank statement. Then bank receive the bank statement from bankers and then upload in SAP. Once you are going to upload, system automatically is going to what to say, update the adjustment entry. Adjustment entry means if your outgoing bank uh, account is credited, then system is going to post a reverse entry. Outgoing bank account will be debited and main bank will be credited, and this is how the balance is getting transferred here. And always the bank GL is going to match with bank account. This is how. But whatever this accounting entry which is taking place, or which is accounting entry which is generating automatically after uploading the statement, it's not like that automatically without doing anything. It's there is a huge configuration. There is so much of configurations are there. We have to do certain configuration. We are going to decide that, which accounting entry, if you are having, if you payment receipt, then which accounting entry should take place. If you are going to make payment, which accounting entry will should take place, which GL will be debited, which GL will be credited, in terms of like bank charges, bank interest, lots of kind of transactions will be there. How system is going to identify whether it is a bank charges transaction, whether it is related to bank interest, whether it is related to customer payment or vendor payment or any other kind of transactions. Lots of questions are there, guys. So those we are going to those I'll show you guys once I configure this electronic bank statement, or EBS, or electronic bank reconciliation. So once I start the configuration there, I'll let you know. And once again I will explain how system is going to clear this, and how system is going to find out the transaction, and how the accounting entry will take place. Now in this, if you guys are having any question, then just ask me one by one. The question is, why not to debit or credit main account? What other ERP, what other systems are following, that's their headache. I don't know what they're going to follow. I'll just explain about SAP. I know this concept. Now here everybody are having different concept. Let us talk about SAP. I told you guys, let's suppose here, if you're going to debit or credit main account, what is happening? You made a payment to the vendor 1000 rupees. Okay, you made a payment to the vendor 1000 rupees. Let's suppose this amount is there in your GL account right now, and the same amount is there in bank account. So it is tallying, as of now it is tallying, both amounts are matching. Now where is the differences? Once you made payment to your vendor by check 1000 rupees, then if you are going to credit your main bank, so what will happen? Your main bank GL, the balance is going to be reduced, and it is going to show 13,000, whereas your bank account is still having 14,000. Why? Because you have made this payment by check, and vendor is going to deposit that check after 6 days, after 7 days, after 10 days. So what will happen? Here there is a difference between your bank GL and your bank account, 1000 difference is there. Likewise, if you are having 5 or 6 these kind of transactions, then what will happen? Your bank account says 14,000 rupees, whereas your bank GL says only 7,000 rupees. So there is a huge difference. And in between, if auditor comes, if the audit is taking place, then they will say why this difference is. Now you start showing all this one by one. You started checking all the transactions. Why is the difference is there? It will take lots of time. So why to do these kind of things here? That's what I said, that whenever you made payment to the vendor, we are not going to credit main bank account. We are, instead of main bank account, we are going to credit our clearing GL, outgoing GL. So this 1000 rupees will be there in the outgoing GL itself. Now, why we have what to say credited outgoing GL? Because the reason behind is, as per accounting rule or standard, the transactions should be recorded whenever it is taking place. So once you issued the check to the vendor, immediately we have to record. So vendor got debited, it's okay, but how come main bank GL is going to be credited? Main bank GL cannot be credited because we don't know when vendor is going to deposit this check and when this amount is going to be cleared from bank account. So we have to tally our bank GL and bank account also. Those balances should be, same. The balances should be equals. So that is why, if we have credited main bank GL and vendor is going to deposit this check after 15 days, then till 15 days, what will happen? There is a difference between our bank GL and our GL account and bank account. So that is what, instead of crediting main bank GL, we are going to credit outgoing GL. So this 1000 rupees will be outgoing itself. Vendor account got cleared, it's okay, but this 1000 rupees will be there in the outgoing GL itself. When it is going to be cleared? Once the vendor deposited check into bank and the bank statement got updated. Now here bank account, let's suppose right now it is 14,000 itself. So let's suppose after 15 days, this amount got cleared and it went to the vendor account. So bank account is showing 13,000. At every end of the day, let's suppose you are receiving the statement from banks. So what will happen? Till 4 o'clock, till 5 o'clock, your bank account is having 13,000, your GL balance is having 14,000. But once you receive the statement, what will happen? That statement is going to have this information that okay, 1000 rupees payment has been made somewhere. So this 1000 rupees payment has been made. It means the bank account that account got deducted with the amount of 1000 rupees. Now system is going to identify which transaction it is, and then how much amount got deducted and what is the total balance. And based on that, what will happen once you upload the balance in SAP? What system is going to do? System will also pass this accounting entry. Then what will happen? Outgoing GL will be debited and now main bank GL is going to be credited. So here your bank account balance got deducted on certain date, and on same date what will happen? We uploaded the bank statement also in SAP. So your main bank is also going to be credited here on the same day. So on the same day this bank account become 13,000 and GL account also become 13,000. So there is no difference. That is why the bank reconciliation all about, isn't it? Earlier what people used to do? Earlier people used to do like they'll be having passbook and they'll be having bank GL. On weekly basis they are going to update this passbook, or daily basis, whatever it is. They'll be having a reconciliation team also who keep on finding the differences. What is the differences? Why the differences are? And they keep on, what to say, uh, doing this reconciliation, passing some whatever this adjustment entries are there, lots of things. Now it is not required. Even let's suppose bank statement is saying like this is 12,500. Bank has deducted 500 rupees as a some transaction charges, bank charges. So those 500 is also there on the statement. Okay, those 500 also is there on the statement, and that also system will pass a separate accounting entry for that. In that case, what will happen? Bank charges GL will be debited and main bank itself will be credited directly. In that case, incoming outgoing GL is not coming into picture. Main bank will be credited based on this statement. But before that, we are going to do certain configuration, and based on those configurations, system is going to identify these all things. So here I need to make you understand about the concept of outgoing and incoming GL. This is how SAP works. We have to create, and you must have to create outgoing and incoming GL if you're having bank reconciliation mapped in SAP. Uh, that's what I said, that every ERPs are having different concept. SAP is having this concept. SAP says that don't touch main bank GL account until unless the exact figure is getting appeared, or it's getting recorded in your bank account. Once it is appearing in the bank account, just take the bank statement, upload in SAP. SAP is going to do all automatically. Till now, it has to be there in the parking GL, clearing GL, or what to say, interim GL. These all are same. That is outgoing or incoming. So we'll have to update outgoing. It means payment. If you are going to make payment, outgoing GL will take place. If you are going to receive payment, incoming GL will take place. Okay, so automatically during APP itself, this outgoing GL itself will be credited. Okay, so here incoming outgoing GL itself will take place during transaction, and main bank is going to be debited or credited once we upload this SAP's once we upload the bank statement in SAP. But guys, this bank statements are also, it's not the bank statement which you download in PDF format. Those bank statements will be in different format, like MT940 is there, some Swift format is there, some other formats are also there. So these all things I'll let you know during configuration class.